gonna kick this off. So thank you for setting aside some time today, Keith and Mike. On the call here with us is Keith Gray and Mike Bilski. I'll have you guys take a minute and introduce yourselves. I'm Bradley Wilkes, CEO of Open Payment Network. Keith, why don't you take a minute and introduce yourself? And Mike, then why don't you introduce yourself? And then we'll kick it off with a level set and discussion around instant payments and what they are. And then just dive into the topic at hand, which is how do we start making this relevant for financial institutions and their customers? So Keith, go ahead.
Yeah, thanks, Bradley. Yeah, I am, as Bradley said, Keith Gray. I work and have worked for the clearinghouse since we launched the RTP network about 5 years ago. My main area of responsibility is to work with a lot of our technology partners, and that ranges all the way from large core processors and companies like OPN to fintechs looking to use the network to extend their product offerings as well. So thank you, Bradley, for the invite.
You're welcome. Thanks for joining. And Mike, do you want to take a minute and introduce yourself?
Sure, Bradley. Mike Bilski, CEO, North American Banking Company. I started the bank about 24 years ago. We're currently a smaller community bank in the Twin Cities, about 1.2 billion. We do have 5 offices in the Twin Cities, soon to be a 6th office. We also have a little specialty payments business that we have. We're the 23rd largest processor of ACH in the country, and we have a couple other things that we do. We have ExcheQ and a few other things. So thanks for
Mike,
having me.
I was going to say you may be a smaller bank, but you guys carry a really big footprint in the payments business for sure.
Oh, sure. There you go. Picking on my weight. I've been trying to do better.
I was going to say footprint is good metaphor, Keith. I was going to say big punch. So, there's some blows you don't want to take. And
it's great.
They're punching way out of their weight class.
Yeah.
Really? I don't know. I thought I stepped it up, but I've been trying to trim down. I want to be more like you, Bradley.
Oh, thanks for joining us. Well, so the interesting thing about the U.S. payment systems, and we're in this transformation, and we're changing from delayed or batch-based systems predominantly. We have FedWire, which is immediate, but we're making immediate payments. We're in this shift where we're making immediate payments more ubiquitous and perhaps even affordable. But Keith, will you take a minute and just give us a level set about the industry? What is TCH doing to help bring instant payments into the market, and just educate us with what's going on and kind of an update on how things are going in that effort?
Yeah, sure. So, the history of it, guys like Mike and other leaders in the industry, I guess 6-7 years ago, came together to form what was called, I believe, the Faster Payments Council at that time, to really reimagine what the U.S. needed to be competitive with the rest of the world in the payments business, and to better serve our customers, both consumers and businesses. And the mandate came to the clearinghouse to build a new payments rail that would meet the needs of the next generations, right? We hadn't launched a new payment network in 40 years. And so we launched RTP 5 years ago in this coming November now. And it's been nothing but rapid growth since. Obviously, the industry was ready and needed not only the benefit you get from the immediacy of the payment, which is where a lot of people get caught up, but I think of RTP as really a real-time messaging network that carries the payment too. So you get not only the payment, but the information associated with the payment. You get payment certainty. You get visibility on both sides of the transaction. I know I've paid you, and you know you've been paid, and you know that immediately, right? And you get just just an payments capability that fits right into the use case and makes itself almost invisible. So think Uber. I took an Uber to the airport in New York early this morning, and you just get out of the car, right? The payment process is just a part of the whole experience, and it's simple and easy and just happens. And a lot of the use cases that we're seeing on RTP are taking advantage of that very component or capability of the network, I would say. We have almost 300 banks and credit unions using the network now. That changes every day, many through technology companies like you, Bradley, and OPN, and many others. And also the capabilities and the use cases, I should say, continue to grow as more and more products are getting launched on the network as well. I don't know, Mike, I'll defer to you. You've been around from the beginning of the network as well. Anything you'd add?
Well, I think, it goes back before, the Faster Payments Council came out of the Faster Payments Task Force, which came out of, a bunch of steering committees and things like that. And I think not only the financial industry, but all the other industries were looking for a way to provide safer, faster payments. Originally, same-day ACH, I think, while it was a little delayed, has helped ease some of that. There's no question ACH is by far the cheapest rail right now to move money and information. And you can do it in large quantities. I think the move to real-time payments, deals more with transactional flow, person to person, person to consumer, or person to business. And, my little app that I developed with my staff, obviously they took a crazy idea I had, and, it works using same-day ACH. And if you believe, like I do, that most of the population, all they care about is notification, settlement. If settlement happens within the 24-hour period, most people are fine with that. However, we all know there's a need for instant payments and instant credibility, or instant credit, really. So if we can push the payment quicker, obviously that's better for everybody. I think, our connection right now to RTP is through OPN, and we hope to have our app not only continue to work with same-day ACH, but to go to RTP receive banks, as well as FedNow receive banks when that's up and running. So I think it's come a long way. I was interviewed by somebody in London today for a payments thing, and I just, equated it. Our country's going to just continues to take a little longer, but just because we have so many older systems out there and we have so many different ways to do it, and I think we're fortunate we're not having the government mandate how we do it. So I think it'll be good for everybody in the end. So the last thing that I just wanted to touch on, Bradley, before you move on to something else, I think the one problem we're all going to have going down the road is trying to get to that ubiquity, trying to make sure that everybody has it. The payment types that we had before real-time payments, or before, not everybody could use them. Not everybody had the ability to do a wire. Not everybody had the ability to do ACH. And as the real-time payments have gone faster, fraud happens faster. And if you don't know what you're doing as a payor using these products, you can get frauded pretty quickly. So
Yeah.
I do think one thing we all have to work on more is education as well. So.
Yeah, I agree with that. I think it's really important. I'm glad you brought that up. One of the questions, and certainly a concern for financial institutions and their customers, is, fraud. And education is important because consumers may come into instant payments not understanding, for example, their irrevocable nature. And, we don't have robust return mechanisms yet on instant payments like we do in some other payment channels. So, Keith, tell us what you see in terms of fraud, and what, if you happen to have any of the numbers and what you're seeing, how does it stack up against other payment channels?
Well, when we were launching the network, 5 years ago, Zelle was launching at about the same time, and it's been well documented some of the challenges Zelle had in the early days, anyway, with higher rates of fraud than you would want. And we also had the experience of being able to look at the UK and their experience as well, where they had higher rates of fraud. So we had some really good data points and some lessons learned, I would say. At this point, and I always knock wood a little bit when I say this, because you never want to let your vigilance down, but the network has had literally no measurable fraud at this point. And that's largely due to the fact that the large originators are doing a really good job on the front end of the transaction. So in a real-time environment, the potential for fraud changes. One of the huge advantages of RTP is the credit push nature of it. There is no debit capability. You don't have to worry about people pulling money out of your account and you don't see it immediately, right? RTP is credit push only. I have to send you the money. You can't pull it. And both sides can see the transaction immediately, right? However, the opportunity then is in unauthorized fraud, which is where you trick me into sending you money. And once I send it, that money's gone and irrevocable. So there's no pullback capability, no easy way to get that money back. So you've got to do a really good job. Mike hit on it earlier, of consumer education, and we need to remain vigilant on that. And thankfully, at this point, with the network, that absolutely hasn't been an issue. The other type of fraud is where you take over my device, right? It's unauthorized fraud, right? Where it's not me on the other end of that browser. One of the things we've had going for us is just the advances in technology in the handhelds over the past 5 years, right? With the biometrics and multi-factor authentication and a lot of those things that the banks were already used to doing. And that's had a big impact on it as well. So it's not something we ever take for granted. We stay focused on it. And it's largely due to just the great job the large issuers are doing on it.
Mike, in comment, and when you think about, your financial institution and that you do a large amount of payments, you've clearly had to address fraud. What do you see for instant payments on the horizon relative to fraud, and what are the concerns that a financial institution should have?
Well, I think we have to think of it from both the originator and the receiver, really. As a large originator, and as Keith knows, all of his large originators, we have a big compliance department that spends a lot of time with knowing our customer, knowing what they're sending into the network, whether it's instant real-time payments, same day ACH, ACH, and we spend a lot of time doing that. When it comes to the receipt side, the fraud has to go somewhere, and those fake transactions, the credit has to go somewhere. And when you're just a receiving bank, I don't think you're doing the type of due diligence that you need to do up front on your deposit customers. I think everybody does a great job, but obviously ours and those of us that are large originators spend a lot of time up front before we let somebody have access to pushing transactions. The best thing I think that we have going for RTP and FedNow is the credit push. I think that helps, no question about it. So
yeah, I think that the fraud numbers are borne out there in terms of risk. There is reduced fraud because it is credit push. So that's great statistics. So as we think about trying to reach ubiquity, what do you think the big hurdles are for instant payments for a financial institution in terms of adoption? Mike, I want to ask you this question. You're kicking off early. You're starting RTP. You're certified there. You're originating transactions. What do you see as kind of the hurdles to ubiquity, and particularly for your customer base? What do you think is important to help them adopt instant payments?
Well, I think it's just more education. I've been astounded with my app, our little app that we have that our customers use, that we have 13 banks using it now, that the different applications that they find to use that, and the more creative they get, and they come to you, and you didn't think that that would be something that RTP, a FedNow, or an ExcheQ would have the ability to make that happen. And when you're pushing credits and you start getting creative, it'll be the customers who tell us that, I want to do it this way, and we say, yeah, we can do it that way. So I think that's the greatest thing right now about that. We all have our standard formats that we need the information in, but there's no question we're making it easier for all of us to communicate back and forth. So
Keith, to you, excuse me, in terms of, you have, hundreds of banks on the network now on RTP, which is a, great milestone. And you can tell us kind of what your projection plans are, but how do you successfully help those banks on board? And what do you think the keys to success are in getting them there and getting them ready operationally so that they can start offering instant payments to their customers?
Yeah, so there's two sides, I would say, to enabling RTP. And once the bank has made the decision that they want to offer real-time payment capability to their customers, and I will say, most banks that come live, banks and credit unions, come live with the receive capability first. They want to be able to catch those payments that are waiting out there in RTP land, the large originators. Any bank or credit union that goes live, there's enough volume on the network where transactions immediately start coming in. So it protects your customer base by offering a service that they want, and it creates a new deposit channel into the bank. That's just the receive side. So once you've made the decision that you want to enable that for your customers, then you have to decide that one side of the equation is choosing a technology provider. And that technology provider, Bradley, is something you guys offer. It's something core processors offer. So it's a vendor selection process. One of the hurdles we had to clear early is getting a wide variety of technology companies enabled that can quickly turn on the RTP network. And we have that now, Bradley, with companies like yours and many others. So, and one of the, as an aside, one of the misconceptions with the FedNow launch in May, or between May and July next year, they're saying is that somehow just by turning it on, that they're going to have the same challenges that the banks had enabling RTP, right? So it's not just flip the switch and it's going to work. There's a lot of work to get there. Now, what we've done on the RTP side is really created a very easy onboarding process where frankly, once the technology is in place, we can turn a bank on in literally a week or two. So we've automated as much as the process as we can on the back end, which is getting a bank onboarded. And the harder lift is choosing your technology provider and getting that implemented. So
I will say, I think your team has done a great job in terms of streamlining the ability to bring financial institutions on. The work to integrate and get certified initially is pretty heavy lift.
Yeah, and that's exactly why, and Bradley, that's exactly why banks are coming through a technology provider. Of the almost 300 banks and credit unions on the network, all but about 30 come through what we call a third-party service provider like OPN or the others.
Yeah, great. Mike, you've brought up, go ahead.
Well, I was going to say, but once we've accomplished that, the connection through OPN to RTP, I think there's no question that The RTP staff is very well organized, and if you're thinking about it, following those steps that are necessary. My staff initially looked at it and said, well, how are we going to keep track of all this? I said, well, it's just like we do for the card networks. We have a separate, general ledger account that tracks it. And, we had to fund the joint account, but that, it's all easy to do. And if you think about it, we're doing most of this stuff already from a live card base. So, this is just very similar, a little bit different, but very similar in the end. So.
I like hearing those words from you, Mike. I think you're a standout in the industry as a CEO with your payments expertise. I don't know that all financial institutions have your comfort level around payments, but I do think that what you're saying is an important thing to understand, and it hits upon this chord that I wanted to kind of address, which is operational readiness. And, financial institutions, and particularly as they start to go out to their customers, one of the big changes in instant payments is 24/7 operation. And so that's a pretty significant change. And in the RTP case, it's pre-fund. So talk to us about what guidance would you have for a financial institution that is considering RTP, maybe in or maybe just starting. What are the keys in operational readiness?
Well, I think you have to have a staff that's willing to work hard, and that's sometimes hard to find now in this day and age. But, the other thing, Bradley, I'm fortunate that we have the volume, so we are pretty much 24/7. We're not quite 365, but, so that part helps. But, we all remember, and we all should remember, when cards didn't have live balances. And now if you're offering cards, you're connected somewhere where you're offering a live updated balance. So, those things are happening now and in your shop. Most community banks, whether they clear through their primary correspondent or whether they clear through the Fed, I don't think any of them open up in a negative balance Monday morning. I think they all have credits waiting for them. And then when you look at whether you're in a daylight overdraft position or anything like that, I think all of that stuff is going to happen easier than you think. And as well as what Keith says, most of it is credits to start with. So you're going to see that, and you're going to see all that happens. And if your users, what I find is that my ExcheQ users, as many debits as they're pushing out, or debits to their account and sending credits, they're also receiving credits. So, the net position, I don't think really affects a bank much. That liquidity should be a concern, but that's just been my experience.
Awesome, thanks. Let me ask you to kind
Bradley,
of.
I'll add, and one thing that I'd point out is, we've been dealing in a 24/7 world for a long time. Think online banking and mobile banking and even ATMs, right? The bank doesn't have to be open for your customer to come in and get money from your ATM. And launching RTP became just another example of that, right? We don't have, banks haven't had to staff up and have people around the clock any more than they already did with RTP. Especially on the receive side, it's really very straightforward.
Awesome.
Well, and part of that, just to interject, whether you run your own core software like we do and have the volume to do that, or you're through a service provider or service bureau, most of them have enough volume that they're up 24/7.
Yeah, exactly.
But if you're a small shop that still has its own core system, they all know how to do the workflows and things necessary to post things that are coming in. So I don't think it's a big issue that we need to worry about. But that's my humble opinion, Bradley. You're the guy.
Thank you. Let me ask you to kind of rub your crystal ball a little bit. When you look at payment channels, you've got things like Wire, ACH, payment card. Obviously, we still have a number of checks that are still being processed. And you see that as a, total channel volume. I don't know, what is it? Trillions of dollars, many trillions. So, Keith, rub your crystal ball a little bit. You probably do some planning in terms of growth for RTP. What do you see on the growth side for this? And what guidance would you provide for our listeners in terms of preparing for that growth themselves with their customers, and how important is it for them to prepare?
Yeah, so remember, the clearinghouse, we run not just RTP, but we run a wire network, we run a check imaging network, we run an ACH network. So we see across the board, kind of where the volumes are going and coming from in general. And there was a lot of discussion in the early days about where, as you create this new payment network and these millions of payment transactions that have come across RTP now, did they take away from somewhere else? Well, ACH last year it was one of its biggest growth years ever, right? And people are still writing checks. People have been talking about the death of checks for years and years, but people still write checks, right? So in the US, in our financial system, we don't kill things very easy, right? We just add new, which is okay. So obviously all of these RTP payments, for the most part, a lot of them are net new. I would say that some have come at the expense of the people writing a check instead. One of the things we saw from the pandemic, where people were looking for an electronic means of making a payment, and the speed of it wasn't always the priority even, but RTP was there for that, and I think the volume of RTP benefited from that a bit as well. But Mike alluded to it earlier. ACH is, and I think will and should be, the cheapest way to send a payment, the most efficient, cost-efficient way to make a payment when you really don't have to have now and have the added capabilities of a real-time payments network, right? You just want a payment to get there. A day's fine, 2 days is fine, and I just want to be as cheap as possible. However, RTP opens up a realm of new capabilities within the use cases, and you want to use it where it fits. And companies like OPN, what you guys have the ability to do is help make those intelligent technology decisions as far as routing. And the customer just, I need to pay this. No, I don't care when. Let me pay it this way. Oh, I need this paid now. Pay it now. They don't need to know the back end stuff that goes on. That's what I think technology should be able to provide.
I think that's really important. And I think that, intelligent routing in the back end so customers can get to business is key. Mike, what comment would you add to that? What are go ahead.
No, go ahead. You can finish.
What readiness do they need to have operationally and to prepare for this growth?
For banks to be involved in payments, I think it's a great source of deposits, and I think every bank should really want to take the time to be involved in payments. It's what your customers want and need. I think as far as the evolution of it, there's no question that we can't ever seem to kill a payment system or rail, but we do evolve, and there's quicker ways to fix problems now. When a payroll used to get not sent out properly, the only source of correction was an expensive wire transfer for that customer. Well, now there's possibility of same day ACH, or there's possibility of real time. So things can get corrected a little easier as we develop more systems. I think Keith would agree with me that RTP isn't for a large batch of transactions that somebody might originate, but it certainly could handle it if they're properly formatted, but it's made to do other things. I've been around long enough to remember when we were talking on the Nacha board how converting checks to ACH was going to destroy the check silos. Well, the check silos went away regardless of what we did with conversion of checks because the image came along. So there's all kinds of ways that things are going to continue to evolve. And to me, that's the great.
You bring up a good point about the fact that, you know, some of the rails and payments never die. We don't see that in other areas of the industry. For example, if we look back, you know, we had VHS was created and we had lots and lots of VHS tapes. I don't know when the last time you guys watched a VHS was. I would guess it would be a while ago. I'm not even sure if you have a VCR anymore to watch one. And then, you know, you see DVDs. I think the amount of time it took for DVD rentals to exceed VHS was about 7 years. Do you see that happening here? Or are we going to be in another rail, sustaining another rail like checks? And if we are, why don't those older mechanisms die, and should they?
Well, I think the thing that RTP is doing, and FedNow will do, and ExcheQ does, it takes the place of cash transactions. I've said it before, and people are probably tired of me saying it, but you know, you used to pay the kid who cuts your grass or shovel your driveway in cash. Well, you know, my kids are that do it. It used to be my kids, now it's neighbor kids. That they're very comfortable giving me their account number, routing number, and boom, I push the credit. You know, and all that did was replace cash. I never gave them checks. But you know, Bradley, some of these things won't die until the users die.
Okay.
You know, to be fair, look what Deluxe went through years ago. People still wanted their check boxes because they were using them, and now they send them flattened, and you can put them together if you want, or you say you don't want them if you still order checks. You know, it's the most embarrassing thing for me to come into the bank and say my wife needs some more checks. You know, but, you know, that's.
Yeah.
I don't, you know, maybe Keith is brave enough to teach my wife how to use some of these new things, you know. But it's just that they're always going to be there. And your analogy, the VHS, my dad was trying to give away his with his movies, and you know, he thought he was giving his grandchildren a great, you know, thing. I said, Dad, they can all watch them on their phone. Stop. Let's throw it away.
Yeah, exactly. Keith, quick comment. Should their rails die? And if they should, why don't they? And why don't we kill them? Just real quickly. And then I want to invite some of the listeners to put their questions. They can post their questions in the YouTube channel. We'll pick them up there, and they can ask questions. But just real quickly, why haven't they died? And should we do more to kill off the old stuff without killing the users?
Yeah, I think you provide the capabilities and let the customers decide how they want to use them, right? I mean, there's no doubt with the changing demographics, right? As the generation before me and my generation gets old and moves on, and my kids' generation comes. I mean, heck, my kid hasn't been to a bank, let alone written a check in years, I don't think, right? So without doubt, I think you're going to continue to see more movement towards a electronic approach, regardless. I think it happens over time, just like we've seen already. And I also think that at some point a payment is going to be a payment, and you're not even going to have to differentiate, is it real time or is it not? It's just going to be, that's what it will be. A payment happens immediately and it settles and closes immediately. And that's just the way it'll work. Now, us guys probably won't be around to see that, but I think that's where it's headed.
Yeah, which is an indication of timing. You think it could be, 10, 20 years before kind of everything. All right, good. We do have a question from the audience. Matt Minchow asks, will RTP impact Income's bank from their credit card revenue? And I'm going to throw on, if so, how? So, Mike, you guys are a successful bank growing well. Talk about the impact you think RTP will have on Income.
None.
Particularly credit card.
None. It's not a point of sale transaction. It shouldn't be used for that. It's the benefits that you get from a credit card transaction from a customer standpoint are far superior to what you get from an RTP transaction. I just don't see that impact at all.
Good comment. Thank you.
And the bottom line is the consumer gets the pick, and consumers love the benefits they get from a card system, right?
Yeah.
Well, and the one benefit they all take for granted is the protection that they have on the product side.
Yeah. Good. Which obviously isn't as robust in RTP yet. So good comments, guys. Thank you. Appreciate that. Talk about for a minute. I'm going to throw this out to you, Keith. Talk about the impact of, two major payment networks in the U.S. Other countries don't configure that way. They're going to instant payments. They might have two rails. There's consolidation. In the U.S., it looks like we're going to have at least two. Talk about the implication of that on the market, if you would, for just a minute.
Well, clearly we're going to have two, and the Fed changed the direction a little bit on that. Originally, they were pointing to the private sector to step up and build something, which we did. And then the Fed changed the direction and decided that they were going to build FedNow, and it'll probably launch sometime next year, mid next year. So there will be two networks. We as an industry, and that's not just two networks, the clearinghouse and FedNow, but the industry itself with the technology providers and the originators will have to figure out how best to operate in that type of environment. What I think is going to happen need to happen is there will be some level of network interoperability. The good news is both networks are built on the same ISO 20022 infrastructure. Theirs is different from ours. The messaging is different from ours. So it's I equate it to, it's like Canadian French versus real French, right? It's the same language, but they don't sound alike. And it's the same thing with RTP. I think you'll need to be on both networks, and you'll need to have some type of a translation capability, a routing capability like OPN can provide to make sure the transaction gets to the same place. But I tell people you're going to need to be on both networks anyway. You might as well get on RTP now if there's value in being on the network now, and then figure out what your future direction is as it relates to FedNow. When it's time. They're going to launch next year sometime. It'll take a while to get things moving, no doubt. So we're talking years down the road where that'll be really ready for prime time, I would say, in any case.
Good. Appreciate that comment. Mike, you're chiming in there.
Well, I was going to say, Keith, you mentioned it. That's really, and not to plug you, Bradley, but that's really the benefit of hooking up through somebody like Bradley. They can do a translation and connect us to both networks, and we can move, and we can send him a message that says this one goes to FedNow, this one goes to RTP, and on the income side, we get to receive them. So incoming, not the income. So that, I think that's the benefit of doing something like that. Will there be more than two? I don't think it's a foregone conclusion that we just have two now. I think, there's transactions within PayPal that are their own network. There's transactions in other closed loop systems that are moving
Good point.
and settling. So, we do have some other things that don't talk to each other, and to move money out of the networks to another network, it costs some money. So I think we're going to continue on the road that all of these will eventually come together, and it's just going to take some time. I mean, there's no question it's going to take time. Will it ever get as smooth as an ACH transaction that can originate through me, be processed by the Fed, and be settled through EPN, the clearinghouse solution? I don't think it'll ever be that seamless, but it'll be pretty close.
Okay, so I put that in the class of that idea around interoperability and connectivity to both networks as helping to drive adoption. what other network characteristics or capabilities would you look out and say, you know what, these are going to be important to have, and our listeners should be on the lookout for these kind of capabilities so that they know how to help their customers be successful with instant payments? What would you put in that class along with something like interoperability, Mike?
Well, I think you have to make sure that the devices you're using, and you have to insist on them, that they have two-factor authentication. Whether it just has to, you just have to have that. You have to have resiliency to, at the same time, resiliency to change passwords and things like that if customers need them. So to me, that is inherent in any product that's coming out now. And yeah, I just go ahead.
I was scared. Those are critical security components. It made me think about tokenization that TCH is developing and rolling out. I don't remember the exact timeline. It seems like mid-year-ish. I may be wrong, but Keith, update us there on that important development and how that will potentially impact adoption. And
the promise of RTP was always not only faster payments, but smarter payments and safer payments as well. And a key component of that is the tokenization initiative, which, Bradley, we've recently launched. That's available now. And
so
it gives you the ability to, instead of, in Mike's example earlier with the grass cutter, instead of providing an account, you provide a token that you have more control over and can easily restrict or limit or turn on and off easier. And then we match it to the bank account on the back end. RTP supports tokenization from any source, but we also provide our own secure token exchange as well. And we're going to be seeing that. It launched it with a pilot with a banker last year, and I think you'll be seeing that expanding later this year, and especially in the next year as well. So that's important. I think, Bradley, to go on to another important thing is another thing we're really excited about is cross-border payments. So we are currently doing in a pilot with Europe to initiate real-time cross-border payments. There's 10 banks on this side of the water involved, 10 banks on that side of the water. SWIFT is involved, EB Clearing is involved, and we're in pilot now and would expect that to be generally available next year if everything goes well. And there's no reason to think it won't at this point. So I think real time is going to be moving cross-border. I think it's going to continue to expand with the request for payment capability, where I can put a request for payment on the network that includes what I want you to pay me for and where I want you to pay me. And then I can just respond back with that payment. So those three initiatives, the tokenization capability, request for payment, and cross-border, are things that are very high on our radar in our project list now and moving into next year.
Awesome. Mike, any comments? We're getting towards the end here with just a few more minutes before the end of this session. Comments on request for payment, cross-border, tokenization, other factors that you would think would be important for driving adoption. And I can throw in a couple things that we're hearing, to think about. We're seeing efforts around a directory service being important, being able to determine whether or not a financial institution is active and able to receive instant payments. That, to me, is a part of the directory service capability. And, an API first approach, or maybe just an API capability for financial institutions so that their customers' interface is quite simple. Those are some things that we think about. Mike, what do you think about? You get a chance to interact with your customers. Are you seeing anything additional that's important to help drive adoption for instant payments?
I think the biggest thing is the ease of receipt. If a customer wants to send a payment, they don't have to log into a system. They can receive it without doing that. That really makes things easier. tokenization obviously is great. I think both systems will have that. I think it's good to have multiple systems competing. I think it's always good in the end for the consumer. I think we've covered it pretty well, Bradley.
Good. Thanks, Mike.
Keith is very smart, so he's got it all covered.
Yeah, right.
Well, we see the Fed is initiating, additional work on a directory service, so that's critical. And when we're talking with people and we offer an API, a lot of them don't think about an API as a product for their customers, and so they look for an application, which I think you're bringing to market, which is super important, Mike, is an application that the end customer can adopt and utilize that has built-in RTP payments. So good points.
One thing, Bradley, I'd be remiss in not saying, but I think for industry types, whether they're banks or financial institutions or stores or just consumers, everybody can join the U.S. Faster Payments Council, as our three organizations have, as many other organizations have, and we're trying to cover and deal with and educate on all of these issues. And the website is a great resource for these things for people to learn. And points you to the paths that you have a chance to really think about what you want to do. And there's no question the Fed is a great service provider, and there's no question the clearinghouse is a great service provider. So I think we're in good hands as our country develops the instant payment method, and I'm very glad it's not being mandated. So.
Yeah, I am too. You brought up an interesting point, the Faster Payments Council, and their work to help on this educational and awareness effort. I think that's key. We participated there, as you know, and Mike, you're the chairman of the U.S. Faster Payments Council, and we're just recently reelected. And of course, TCH has made significant contributions there. So it's exciting to see. When you talk about the efforts for education and awareness, and Mike, with what the FPC is doing, just quickly tell us what work groups they're doing and how our listeners that are financial institutions or merchants can get involved and help and lend a voice and potentially a vote to the work and education awareness. What's FPC doing there?
Well, you go out to the website. We've published several different papers that cover, network interoperability. We cover all kinds of things, but you're asking me to give away my speech for next week at the member meeting, Bradley, which I'm not willing to do. But I think at the same point, the one thing I would like to cover is that the U.S. Faster Payments Council, working with NACHA to come up with and work with NACHA to come up with the certification program for financial institutions. I would imagine most of the audience today is financial institutions, and I think that's going to be a great resource for knowledge for the banks moving forward. So, but I think the U.S. FPC has done a great job of bringing all thoughts together, not just financial institutions, not just networks. We all get to say our piece. We don't always agree, but we've still remained civil. So that works out pretty well.
Great. Well, we're just a couple minutes out, but I think we'll go ahead and give that back to the audience. Let me say thank you very much to you, Keith, and you, Mike, for participating in this call and helping in the education and awareness and helping to our listeners to understand what they can do to start offering instant payments. Really tremendous what both your organizations are doing to help us be successful in transforming the U.S. payment system to instant payments. Thank you for all you're doing there. And we appreciate your time and look forward to seeing you again soon at an industry event. Thanks, everybody, for participating. Bye-bye.
Thank you.
All right. Thanks, Bradley.
Thank you, Mike. Keith, bye-bye.